Hi folks, and welcome back to Meaningful Money. Here at Lamona Cove, a freezing January Sunday afternoon, so I'll make this short, shall I? Because it is absolutely bitter. You can see my breath? Maybe not. Sun's just gone behind the cliff there as well, which is a bit of a pain, so never mind, hope you can see me and hear me. Now, I'm going to talk about how critical illness insurance works. We've talked about life cover, you know, as in the true form of that. It covers when you lose your life. Critical illness is a little bit different, so I need to explain how that works. And what I'm doing essentially is updating episode 19. Not that anything's really changed, but you know, the production quality is a little bit better than those early ones. So revisiting episode 19, how critical illness works. But before I get into that, I must thank my good friends down here in the bottom right. That's Seven Investment Management, who continue to sponsor me here, for which I'm really grateful. So life insurance is one thing. We've talked all about that. But what if you're ill, but you don't die? Okay, that's probably a better scenario, let's face it. But what if you're sort of quite seriously poorly, but you don't die? It means you're still around, your financial plans can still be worked out, but you need to, you know, if you don't die, life insurance won't pay out. But if you're seriously ill, then that might change your life forever. And you need to sort of think about what impact that might have on you and your family. Now, critical illness insurance is a term-based policy, usually. So remember what that means. It has a start point and an end point. And if you don't claim on the policy in that period, then it doesn't pay out anything at all. It's lump sum based usually. So if you do put a claim in, usually it's a lump sum payment. But what is a critical illness? Well, it's a list of serious illnesses, and it includes it includes all the following and some extra ones as well. So heart attack, cancer, a stroke, multiple sclerosis and motor neuron disease, HIV in certain circumstances, Alzheimer's disease, blindness, loss of a limb or loss of speech. Now, as you can imagine, there are definitions, strict definitions as to what it actually means to lose a limb. You know, is it sort of the end of your finger or is it off at the shoulder? Well, you know, actually it's usually at the wrist or the ankle. But, you know, the definitions are laid down firstly by the ABI, that's the Association of British Insurers, and those are the basic definitions. But the sort of wider definitions do vary between providers. So it's important that you look into that, or you have an advisor look into that for you if you're considering taking out critical illness insurance. Now, critical illness insurance is more likely to pay out than just life insurance because you're less likely to die than you are to get ill and survive. And because it's more likely to pay out, it's more expensive, understandably. So how much should you have? Well, ideally, of course, if you have any significant debts like a mortgage, the perfect scenario is that you would have your mortgage paid off by a critical illness policy if you do become ill and are diagnosed with one of the critical illnesses. But that might be prohibitively expensive for you. So if it is, then consider the following. How about taking out cover which pays 3 or 5 years worth of your mortgage payments? That way, if you do become seriously ill, you know, you can concentrate on getting better rather than worrying about having to go back to work, having to pay the mortgage. You know, at least you won't be kicked out of your house while you're recovering from this serious illness. You could possibly think about covering like a proportion of your earnings or something. So, you know, if your net earnings are £2,000 a month, you might want to cover £1,000 a month for 5 years, so 60 grand, you know, something like that. Just think it through, what the impact would be on you if you were seriously ill, but that you don't die, and hence your life insurance won't pay out. But as ever, sort of try and strike the right balance between how much you're paying every month in premiums and, you know, still being able to eat and go out and have a drink and stuff like that. Okay. I hope that's clear. That's basically critical illness insurance in a nutshell. And we've got one last type of useful insurance to talk about. That's income protection. We're going to be talking about that next time, probably from here in the same spot actually. So thanks for watching this one, and I'll see you next time.